Meta's climbed 540% since 2022 and looks set to continue pushing up and staying above $550. It has recently broken out and set record highs and is now on the brink of presenting buying opportunities. In this recording, we look at why Meta has been on such a good run and how you can maximize the next phase up of this bull market. I'm going to be diving deep into the company's dramatic rise, fall, and resurgence since its IPO, which has seen its stock price climb an astounding 1,240% from its IPO in May 2012 to its current all-time high in September 2024. Meta's IPO on May 18th, 2012 was one of the most highly anticipated tech IPOs in history, with an initial offering of $38 per share. This valued the company at a staggering $104 billion, making it the largest valuation for a newly public company at the time. But despite the hype, the IPO faced some serious challenges right out of the gate. On the first day of trading, technical glitches on the Nasdaq caused confusion amongst investors. The stock struggled to stay above the IPO price, closing at just $38.23. And it didn't get better from there. Over the next few months, the stock price took a nosedive, losing over half its value by September 2012, falling to as low as $17.55. Many were questioning whether Meta could live up to its lofty valuation. But despite these initial struggles, Meta's stock eventually recovered and showed substantial growth over the following years, climbing 813% from its IPO to its previous all-time high in September 2021. What drove this initial rise in stock price? Well, it was a combination of factors. Facebook's advertising model started to prove its worth, and the company made some smart moves, including the acquisitions of Instagram and WhatsApp. In 2012, Facebook acquired Instagram for approximately $1 billion. At the time, many would have thought Zuckerberg was crazy for spending that much money on a photo sharing app. But look at Instagram now. It's become one of the most influential social media platforms worldwide and a significant source of advertising revenue for Meta. Then in 2014, Meta made an even bigger move, purchasing WhatsApp for about $19 billion. This acquisition was part of Meta's strategy to dominate the global messaging market. WhatsApp's strong international user base provided Meta with a significant footprint in regions where it had less penetration, especially in developing countries where WhatsApp was a primary means of communication. The WhatsApp acquisition has also been a resounding success. The app has continued to grow, adding more features like voice and video calling, end-to-end encryption, and business functionalities. But the tech world is nothing if not volatile. From September 2021 to November 2022, Meta stock price experienced a sharp decline of 78%. So what happened? Well, a perfect storm of challenges hit the company. There was slowing revenue growth, increased competition, and significant investments in developing the metaverse, a concept that many investors were skeptical about. Add to that the changes in Apple's privacy policies, which impacted Meta's advertising effectiveness, and you've got a recipe for investor concern. During this time, Mark Zuckerberg also found himself in the hot seat, dealing with legal challenges and court appearances involving the Federal Trade Commission, that's the FTC, and also the Cambridge Analytica scandal. This legal battle culminated in a settlement where Meta agreed to pay $725 million to resolve the Cambridge Analytica scandal case. But here's where the story takes another turn. From that low point in November 2022 to the current all-time high in September 2024, Meta stock has climbed an impressive 540%. So how did they pull off this comeback? Well, Zuckerberg declared 2023 the year of efficiency, focusing on cost-cutting measures that improved profitability. The company also doubled down on its investment in AI and VR, which began to show promise. Meta's financial results started exceeding expectations, with the company reporting a record free cash flow of $43 billion in 2023. The focus on generative AI is expected to be a major contributor to advertising revenue growth over the next decade. This technological advancement is likely to enhance user engagement and allow for more targeted and effective advertising solutions, which in turn could increase revenue. Moreover, Meta's financial results for Q4 and the full year of 2023 were impressive, exceeding Wall Street's expectations, with a Q4 EPS of $4.33 on sales of $40 billion. This performance, coupled with the announcement of Meta's first ever dividend, signaled strong financial health and a commitment to returning value to shareholders, which further buoyed investor confidence. These developments reflect a strategic pivot in Meta's operation, emphasizing cost efficiency and technological investment, which have collectively underpinned the stock's growth trajectory into 2024. The company's ability to adapt to changing market conditions and pivot its strategy when faced with challenges has been a key factor in its resurgence. So, given everything we've gone through, when should you invest in Meta? Its stock performance over the years tells us everything we need to know. It has a solid history of rewarding its investors, but it does come with challenges. Meta declined 78% due to the company falling foul of the law. But the recovery shows that this could be behind them with even greener pastures ahead. However, you just don't know what Zuckerberg may pull next to cause the stock price to plummet. If the stock continues to set record highs, then here's how I'd approach it. Take an initial small position, risking no more than 1%. Ensure you have a well-placed stop loss. I've talked about this in previous videos. Look at the ATR over say 30 days and multiply it by a number, anywhere from 4 to 8, depending on your account size and experience. The wider, the better for me personally. If the stock fails, the trend has clearly reversed with such a wide stop loss in play. And remember, you will only lose 1%. The question you have to ask yourself though is, what if it doesn't fail? If it starts returning a profit, strategically buy more of the stock, using the same 1% position size while removing risk on the previous position. This is known as compounding. This way, you cap and protect the downside while maximizing the upside through letting winners run. If the bulls take a hold of the market for another strong run and the Nasdaq 100 follows the S&P 500 by setting record highs in the coming days, Meta could potentially hit $1,000 per share in the next 12 months. The tech world moves fast and anything can happen, so you need to be calmly prepared for all eventualities. But remember, the odds are always with the bulls until they aren't. My philosophy is to always side with the bulls, but protect yourselves from the bears. The potential for Meta to leverage its massive user base across its family of apps, combined with its investments in emerging technologies like AI and VR, suggests that the company could continue to see strong growth in the coming years. However, it's important to note that Meta still faces challenges. Regulatory scrutiny remains a concern, with ongoing debates about data privacy, market dominance, and the societal impact of social media platforms. The company will need to navigate these issues carefully while continuing to innovate and grow. Another tech stock that is dealing with its own significant milestone at $700 is Netflix, the giant streaming platform for your favorite TV shows and movies. This stock has climbed almost 350% since its own troubles in 2022 and could be setting up for fresh buying opportunities. Check out this video where I break down its recent performance in detail.